I'm Tyler Laundon, Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities here with your Cabot Weekly Review. It is around 12:20 Eastern Time on Friday, August 2nd, and tough day in the market. It's been, last 2 days have been rather tough. Let's back up just a little bit. Of course, things have kind of flipped around this week. So the big event of the week was the Fed meeting on Wednesday. Going into that, market was up nicely on Wednesday, and then coming out of that meeting was good. Market held up through Powell's press conference. Definitely a risk-on environment. S&P 500, NASDAQ, and Mag 7 all posted their best performance on Wednesday since February. The takeaway really was that analysts saw that the Fed had kind of shifted into saying that things were pretty balanced between inflation and employment. Of course, those are the two parts of its dual mandate. So that they saw things were in balance. Then we get into Thursday. Growth worries came back to the front burner when we saw weak ISM manufacturing data and then also an increase in jobless claims, which were the highest in nearly a year. Then we get into Friday this morning. We get the July payroll number, which really missed by a wide margin. A pretty big surprise there. And then also June was revised downward. So the unemployment rate increased to 4.3% versus expectations of 4.1%. And so that's driven this renewed risk-off environment, concerns about recession, et cetera, retreat in the broad market, which we're seeing here in the charts, and then also in growth-oriented stocks especially. We're also seeing a rally in bond prices, which is driving yield lower. And I think really the question is going to be throughout the weekend and into next week is the Fed missing the boat here, right? So the Fed decided not to cut. They held rates steady, but did lean toward rate cuts in September and the rest of the year. We saw the Bank of England cut by 25 basis points this year. So the Fed, it's not really on an island, but it's definitely not doing what all the other central banks are doing. It's kind of holding out. So the Fed, Jerome Powell, did talk about how they see the labor market normalizing. Of course, trying to get the labor market under control was one of the big reasons that they have increased rates. But now that we're seeing this weak labor jobs numbers, these weak jobs numbers, kind of just calls into question, like I said, are they missing the boat? As far as rate cut expectations, so it's kind of interesting. If we look at the CME Fed Watch tool, I looked at it this morning, that is now saying a 75% probability of a 50 basis point cut in September. So that's in, 6 weeks? And an 83% probability that the Fed will cut 100 to 125 basis points by the end of the year. So that's pretty aggressive projection. Cross-checked that with FactSet's data. They have a different database. That is leaning toward just a 25 basis point cut in September. And it's saying just 75 basis points in cuts by the end of this year. Bottom line, expectations for rate cuts September out to the end of the year are going up. Of course, a lot of this data is just coming in over the last 48 hours, so there might be some noise in there. But that's kind of where we're at. As far as other things going on, of course, we have some geopolitical concerns that could hang over the markets today and going into the weekend. We don't know what the Iranian response to the recent Israeli assassinations will be. A little bit dicey going into a weekend with that situation on the table, but that is what it is. So here we are. Market is off the lows for the day so far. Like I said, it's about 12:30 Eastern Time. S&P 500 down 2%. We'll see where it goes. Who knows? Who's with me? Can the market get back to break even today? That would be something special for sure. Okay, let's jump into a couple of quick charts and then talk about the three stocks that I want to cover today. So first, let's move on to the NASDAQ. As you can see here, down about 2.4% today. Has found support around the 16,445 level. Found that support this morning. That's back from the end of May. So that's what's going on with the NASDAQ. Small caps down a little worse, 3.2% today. You know, small caps have been, like I talked about last Friday, one of the real bright spots in the market, especially since the CPI reading came out on July 11th, which was right here. As of yesterday afternoon, small caps still leading across growth, value, and core. And based on the degree of outperformance, they must still be leading by a pretty wide margin at this point today, but down a little bit more than the broad market. Of course, small caps tend to take it a little harder on the chin whenever market concerns about recessions happen. On the other hand, we do have some relief taking shape in the yield area. So 10-year yield here is down 3.5% to 3.84%. So two really significant down days due to a bond market rally, which of course cuts yields down. So the 10-year now is down back to around where it was at the beginning of February. And lower yields, lower interest rates tend to have an outsized benefit for small cap stocks because they have way, way higher rates of variable rate debt relative to large caps. So potential tailwind there for small caps. So now let's jump into the stocks that I wanted to talk about today. So one of the themes from the last week with earnings, especially across the big companies, the big mega caps, was this talk about capital spending for AI. And it's been a both concern for tech spending, but also a boon for other smaller businesses. So I have three kind of under the cover data center plays that I think are worth your attention. So we are going to jump right into those. I'm going to zoom past a couple other stocks that I had in here from last week. All right, so the first one is Modine. So Modine has a market cap of $5 billion, so mid cap here. Stock price of about $100. They are an HVAC and refrigeration company. They do a whole lot of different things in that space with like traditional forced air, heat pumps, oil boilers, you name it. But one of the areas that they are growing the fastest in is equipment for data centers. One of the more interesting parts of their business that I think is they're developing a cooling distribution unit. They call it a CDU that will help with direct-to-chip cooling. It integrates seamlessly with their other products. Management is talking about a need for hybrid solutions in data centers that combine both air and liquid cooling techniques, really just to kind of achieve optimal cooling efficiency for everything while minimizing energy consumption. And they think that their product, this CDU, is really going to help. Shipments are going to start in the fourth fiscal quarter of this year, and that's one of the reasons why there's growing interest in the stock. As you can see, it's down today, but had a nice day after earnings on, I guess that was Wednesday. All right, we'll move on to Limbach, a much lesser known company. Market cap here is just under 620 million. Ticker symbol is LMB. So they are another HVAC, plumbing, electrical contractor. Again, it's not like a data center pure play company, but they do have exposure. On their most recent conference call, management talked about how data centers can age relatively quickly due to how often all of their equipment is running. And so there's always a demand for upgrades, maintenance, that kind of thing. And that's an opportunity for Limbach. Their CEO talked about how this is going to be a growing area and a growing area where they will focus in the future. So that stock down today, but earnings come out next week. So keep an eye on LMB. And last but not least here is WLDN, another lesser known company, ticker symbol WLDN, market cap of 517 million. They reported yesterday, decent earnings report. Stock is up today, just wildly outperforming most other stocks today for sure, up almost 13%. So what do? They help transition communities to clean energy and more sustainable future. Sounds great, right? On the conference call, management talked about how they just won a study to do for Meta, Facebook, on emissions related to a voluntary clean energy procurement program that Meta has put in place. The company also talked about work that they're doing in Virginia, which is the largest data center market in the U.S. They won a program to study the grid impact for energy demand there, which is going up by leaps and bounds. Big changes in Virginia. So they're going to study the impacts both to service providers as well as rate players. One of the questions that analysts asked management at WLDN was if they do work for any of the hyperscalers like Amazon, Microsoft, because, of course, management mentioned Facebook. So the answer was yes, they do. They've been working for AT&T for a while, and they got into some other details. So too much for me to go into on that. But if you are curious about any of these companies, or really any other company that we talk about, honestly, the easiest thing to do is download an app or conference call where you can listen to the apps. Or apps where you can listen to the conference calls and listen to a conference call. The one that I use is called Quarter. This isn't a plug for them. We don't have any affiliation whatsoever, but it's free. It's super easy to use. And if you're mowing the lawn or going for a walk or whatever, you can just check in with a conference call, listen to it for half an hour or so, and get a really good feel for a company without having to sit around and read boring SEC filings, which some of us do enjoy, but not everybody. So anyway, that's my plug for conference calls. Those are 3 stocks in the data center market under the cover that I think should be of interest. And I'm going to wrap it up there for this week. Have a nice weekend. Let's hope this market improves this afternoon, and we will be back in touch soon. Take care.